Welcome, LeeFX Academy. Welcome to LeeFX Academy. Today we are looking at risk management. So, what is risk management? It is important to understand risk management because it is one of the components that is so important when it comes to forex trading. Okay, so it's very important to know that. So now, what is risk management? So when we're talking about risk management, so we need to know that risk management is a process, okay? Is a process which actually helps you to protect your personal trading account from danger of losing all your account balance. So risk management, it is the process which actually helps you that you do not lose all your account balance. You just lose minimum, okay, when you are trading. Why? Because we know that when you are in forex, you can either make profit or lose. So that is why you need to apply risk management so that you don't lose. When you lose, you don't lose all your accounts, which we call as borrowing an account. Okay, so we go further. What do you need to bear in mind as we are talking about risk management, or as you are using risk management? So risk management actually is defined by the likelihood a loss will occur. So when you're talking about risk management, you are bearing in mind that as I am trading, anything can happen. Okay, a loss can actually occur. Hence, when you know that, you need to apply risk management to help you to know that. So you are trading what else you know the risk is. So meaning you are already prepared. Hence, it will give you higher chances of becoming consistent in the market, okay? Because you will not be trading blindly, you will not be opening things without knowledge. Therefore, risk management actually, it helps you to control your, so that you do not leave your account careless such that you can grow. Okay, so you'll be very much careful when you are trading. Okay, you'll be very much careful when you are trading. So risk management, it is in three types. Okay, we can break it down in three categories that you need to bear in mind. Number one is what we call risk planning. Number two is what we call trading ratio reward. Trading risk reward ratio. Very important. Then we have the last, which is position sizing. Okay, so these are the things that we'll focus on. These are the three components. When you're talking about risk management, these are the things that you need to bear in mind. Okay, so we'll begin by looking at risk planning. Okay, risk planning. What are we talking about? Okay, so when you're talking about risk planning, it helps you to maintain your consistency with the risk when you are trading the market. Being consistent in the market is a hard task. Okay, a lot of people have been blowing off accounts. A lot of people have been failing trading, especially when it comes to being consistent in trading. So planning in advance to help you to become consistent. So very important. The idea of the amount you are willing to risk per trade. This is a personal decision that you need to make. Okay, it depends on you. It comes to your risk tolerance and the risk appetite in general. So each one of us, it depends on the way we have the appetite. Others they don't want to risk much, others they don't care, they want to risk more. So it depends to you. However, we highly recommend that you don't need to risk more than 2%. Okay? That is what we recommend you. So let us break down. So let's say, for example, when we're talking about determining risk dollar amount, let's say you have $10. I mean you have 10,000. Okay? So from your 10,000, following the 2%, okay? Following the 2% tolerance, it means that from the all 10,000, you're only risking 200 per trade, okay? So you just do that. By that, it will give you the total amount that you are willing to risk, okay? So you just do 2 divided by 100 by the same amount that you have, it will give you the total. So this planning, it will help you control what we call mental power, mental part of trading. Because when you are trading, you have already planned of what you make and what you lose in case it goes against you. So meaning, if it goes against you, you will not be shocked, you will not be disturbed. It will affect your mental power. Why? Because you already prepared that in case it goes against me, this is the amount of money I'm willing to lose. Those people that become shocked, these are people that enter into a trade, not planning, they are just hoping that all will be well. Hence, as a result, if the market goes against them, they develop PP. So that is the importance of risk management. Now, let us talk about trading risk-reward ratio. What does it mean? So trading risk-reward ratio, it determines the potential loss versus the potential profit on any given trade. So when we're talking about risk, it is defined as the price distance between your entry and your stop loss. Okay, your where you enter and where your stop loss is. That is the risk. You are looking at the distance there. That is the risk that you are risking, the distance from your entry and your stop loss. Reward, it is defined as the price distance from your entry to your take profit. So that is why it is very important you understand these. They are very important. So also we are talking about risk reward. Okay, you need to consider, you need to bear in mind these three fields: entry price, and stop loss, and take profit. Okay, take profit. These are so important. These are so important. Okay, these are so important. You need to know the price, the distance where you have entered and your stop loss, and the distance where you have entered your take profit, so that you understand what you are dealing with, or how much you want to lose and how much you want to take. Okay, so that is all about those three areas that you have talked about when you are dealing with the risk reward. Okay, so this is how you do your to come up with the total reward. So that is risk reward ratio equals total loss stroke total reward. Okay, so the formula, that is total risk equals the pin value open brackets by open brackets the entry minus the stop loss price. Okay, so that is what you need to be using. Okay, so now we come to the third one. Remember, we are talking about three, okay, that you need to know when it comes to risk management. So this is what the third one is: position sizing. So position sizing actually it also good, and it also play a bigger role when it comes to trading. Okay, so there are several ways in which you can determine how big the position should be. Okay, it all depends with the kind of a trader you are. Okay, so different traders have got different personality, and they trade differently. Others have small accounts, others they are holding, they are day traders, others they are scalping. So position sizing depends to a type of a trader. Okay, so what you need to consider when you're talking about positioning: number one, account size. Account size. If you know that you have a small account, don't open big lot size. It will affect your account. That is the account abuse. So you need to look at the account size. Very important. Amount you want to risk percentage wisely. You need also to consider how much. What is the percent are you willing to risk? Okay, very important. Also the stop loss. These are things that you need to bear in mind. Okay, so like we advised, always remember we recommend 2%, at least 2%. So the 2% in 10,000 simply means that you are targeting 50 pins, okay, to reach your stop loss. So if it comes to the position size, it simply means that is 4 minimum lots. Okay, 4 minimum lots. Now, how do you maintain risk when you are trading? Always remember to move your stop loss. When you make profit, you lock your profit. Okay, you lock your profit. That in case it goes against, or in case it does the reversal, it does not affect that profit that you have made. So in that way, you avoid having emotions. Okay, take off. Okay, when you see a trade, make sure that you enter. When you see a good trade, you enter without wasting your time. Okay, and do not risk more than 2%. This is very important. Do not risk more than 2%. Always remember that losses are part of the game. So when you are trading, make sure that you bear that in mind, or else you begin to have emotions. But if you know that losing is part of your game, you'll be prepared. So improve your entry. So always remember to know your setup. Okay, do not chase the market. Know your edge. Are you targeting to which? Are you looking at the candlestick patterns? Is it head and shoulders? You need to know where I need to enter. Is it double top? Double bottom, you need to look at that. Are you looking at support and resistance? Are you dealing with the breakout, all those? So that when you enter, you know that this is a good entry. Reducing the lot size, which I've talked about. You need also to write down your trades. It will improve you to know where I need to improve. It will help you to know where I need to improve. Start the winning trades that worked perfectly, so that you master those. Okay, let your winner lands. So if you are trading, if you are in profit, let your profit land, but cut off losses. Sometimes we do the opposite. We hold a losing trade, then the potential trade we cross it early, prematurely. So also improve where you need to exit. So have a strategy where you need to know to say, if it goes like that, I have no option but to cross. Okay. Importance of having good risk management. It enables you it enables you as a trader to have full control of your emotions. You will not be scared because you have worked on the risk management. The loss size is just okay. You're not open bigger position, you're not open a lot of position, because you have looked at your account, you have already known how much you are willing to lose, you know where your take profit is, your stop loss. So you will not have those emotions, you have set those. Okay, so it also permits you to trade in a smart way and give you, you become relaxed, such that how much profit you make and how much loss. Okay, so always remember that it gives you greater chance to survive in this forex business. A lot of people they quit, because if you continue losing trades, automatically it will force you to quit. Hence, if you are a good risk management, you will not be losing much, and hence you'll be making more profit, which it will help you to continue survive in this industry. Remember, because of risk management, a lot of people it has made a lot of people to lose the trading career. So not following any money management lose as the potential to break your trading career. Okay, so this is all about risk management. So if you want to know more, or you want to learn more apart from risk management or other courses, other lessons that you may want to sharpen your skill, that is a number that you can call or WhatsApp us. Then we'll get to you and we'll guide you. So you can also follow us on YouTube. Okay, you can also follow us on YouTube. You can also follow us on Facebook. Just search for LeeFX Academy. Also on YouTube, you can search for LeeFX Academy. Or on Google, you can search for LeeFX Academy. You see our website. You can also download our app on the Google Play. Just type LeeFX Academy. There you enjoy some lessons, also free signals 1 to 3 on the app. Okay, so we'll meet again, and God bless.